Alright, thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day. Let's get into the charts, shall we? Bada bing, bada boom. So, we broke below the 618 of this diagonal pitch fan, trend base, whatever you want to call it, this pitch fan fib level. The 618, we broke and meandered beneath this region, getting to the lower regions of 26,966 before wicking off that liquidity and bouncing to the upside. We did talk about that 30 billion down below there, and we said look for that divergence to be spawned for that W play to the upside 2 days ago. You can go check it out. And we said if we come up to there, look for a possible rejection at the 618 of a head and shoulders. So we had this idea of possibly bouncing up to take out the short liquidity and then possibly positioning a short there. We were not looking at shorting the bottoms. You do not short support. That is a bad idea. So you look for the fatigue of the time frames up above when we were getting that rejection at the 886. So are we going to see that 618 rejection of this local impulse as we reach the daily resistance level coinciding with that? Who knows? But we are in a small long, up about $400, so we are happy campers as of this moment. And yeah, so you got the 0.5 region down here at 26,250. And yeah, let's go into the liquidity, shall we? Let's go into the heat map of the liquidity. What is the heat map? Well, it's when people leave their liquidity in the charts to be burned to a crisp by the market maker for not using a stop loss. And they repossess the money and say, thank you for playing, please insert token to play again. And so let's see who has to insert their tokens again. What do you know? The pools we were talking about for days came back to get eaten. Even though they were getting lost to Father Time, you did see these ideas projected out into time and space by yours truly. So let's go to where we said that, shall we? So we didn't stream last night because we were trying to work on some accounts for getting funded and also dealing with some technical issues and getting off work early, but we didn't leave you hanging. We said the older bubbles got lost to Father Time, sadly. Still thick in the region we've been aiming at, which is to the upside. A lot of ambiguity on the 146 versus that 12 and 22. I wouldn't be shorting the 12 and 22 personally, so I said they got that 27 and 26.9 region we talked about, so unless they intend to pound the downside, we should realistically see some pools above get squeezed slightly. And we posted the heat map of that pool getting taken out at 27.9, and sure enough, boom, we took that pull to the upside. How long is this sustainable? Let's go into the higher time frame because this is a bit sparse now as it lost some of its steam to Father Time and losing that essence. So let's go to the higher time frame as we expand our vision higher. Let's close this. All right, so 12 hour, not really feeling this time frame. Let's go to the 7 day. Shout out to everyone here. Music is kind of loud. Is it? I adjusted them to be the same volume, so I believe the volume is the same on all tracks. I may be wrong, but we'll adjust it later. I can't do it while I'm live. So let's go ahead and look at that. So the 7 day time frame did suggest that pool to the upside being taken. We did say there was an imbalance here on the 7 day, although the 27K region did have that higher time frame juiciness, which we did knock out. Once you knocked out that 30 billion, the imbalance seems to be clear to the upside now. How far does it last? So let's look at this in detail. So we have this region here, up to 30,300, where we're talking about fatiguing on that daily resistance level. You do have these down here, but let's go to the higher time frame of the monthly, shall we? So this was the thing we were looking at here when we were starting to make our way up. We were assuming that they would come down and try to eat into this hard core and possibly come up into this earlier, But when it started to fatigue out here, we were saying this 27 to 26.9 region was highly likely to get taken, and it spawned that bullish divergence to take us to this upside region. We currently have on the monthly time frame about 15 billion or more, up to 28.7. So at 28.7 it starts to get a little bit threadbare, so you could expect a slowdown of some nature around that region to flag out to induce more liquidity into the charts. Let's go to the 3-month. Just bang it. Alright, so the 3-month still has these regions below. We were talking about, hundreds of billions down below at 25 and even more down at 22, and the sub 19.5 campers that are happily sat in their longs. Are we going to spawn the divergence to come up to these pools at 31.2? There's 41 billion there, and the pools to 34k being paved, getting thicker. So if you inverse Bart Simpson out of here and come up to these, that would be interesting to note. However, these long positions are getting quite thick down here at 22.4. The narrative shifts once we go down there though, so is the bullish narrative still on? As you go to the 6-month time frame, you start to see that when we took out these pools up here at 31.2, that short idea was percolating for sure because of all of this long liquidity below. So as we started to eat into these pools here at 27, are we going to see this lower region get tapped at 25k? That is the question. You got about 83 billion at 22.5, and the sub 19 characters, you got over 300 billion down here. So are we going to eventually see a hit down to these regions? There is a nice caked up narrative to do that down to 22.5 at some point. So however short-lived this pump may be, who knows? It could go all the way up to the moon and higher. I'm not necessarily sold on the idea per se. We'll get into the fibs and try to figure out where fatigue from here. We are in a path for Wednesday, which is generally a complement to Tuesday's move, which New York set it up for a pump. So does Wednesday complement that pump with another pump and then get into Thursday for midweek reversal? We will take a look. So we're going to go to that monthly time frame. We did do the yearly before, but we'll just do it anyway. The path paved to the upside is quite interesting. Once you get above 32.4, you have hundreds of billions starting to build up to 34.8. And you're starting to get some pools forming above 34.8, which were not there previously, which is interesting to note because you previously had stuff at 36 and now it's getting a little bit hotter. So these paths to the upside are still quite warm in terms of these pools building on the narrative to continue higher. They always pull back to build the pool's thickness and come back with the fury. So this could be one of these retrace before we continue lower to thicken up this heat. If we got some of the divergence, it spawns this divergence, creates a head and shoulder, and then we go down some more. So this could be a thing that creates that shoulder and goes down into this liquidity some more. So once again, on the higher time frames here, you got about at 25k, like a good 200 plus billion dollars there, and you got another 200-300 billion down at 22.4 to come back to and take at some point. This could just be the 100x, 50x, 25x knockout. So they knock out those high leveraged folks to fund the move to the downside, because they go up to go down and go down to go up. It is the stop, hunt, rise, drop idea. So they would possibly go up and stop out as many of these 100x pools, and that's why we're looking at these guys carefully, these little pools of 100 million here and there, 200 million here and there, 200 million here and there, that were getting stacked up quite nicely as they gave that sign of weakness, and the pools below just didn't add up to the same amount. So the narrative was implying that squeeze to the upside. So now we need to get our head out of the clouds and look at what's below, as above so below, and we see there's 150 million here at 27,997, 27,7, 158. These $158 million pools opened up here, and these become what you call fair value gaps. These fair value gaps become these gravitational points which like to get filled because they like to stop out the liquidity and take it back and repossess those who do not pay themselves. So that's what we like to look at. We like to look at these pools and assess where it could squeeze up to. All right, so let's go. I think we did the liquidity some justice. By the way, HiBlock costs about $70 a month. So if you like what you see, consider subscribing and hitting that like button. It does help a little bit, however slight. So this is the place we're looking at on the diagonal fib level. We're going to go to the regular charts, our regular fibs, not diagonal fibs, and we had this bearish trend-based fib extension level put out a few before it dropped out of this zone, and it started to drop into this region of the golden pocket. The golden pocket region here, and went even further down into the 1618. Couldn't make it to the 2 level before getting back up. So we're starting to reach this daily resistance level, which happens to also be a 1 level of the bullish trend-based fib extension, which is previous resistance points. So this dotted yellow line happens to also be this daily close here on this daily time frame, the 12-hour time frame. So you had a bunch of 12-hour candles touch here, so this is a potential resistance. Previous support becomes resistance, so we could be at that resistance. We broke down. Are we retesting? Are we going to reclaim this resistance, or attempt to appear to reclaim that resistance, or fade out on that 28,489 region? Okay, so I think we can delete this bearish trend-based fib extension level. The thing to note is the what is this? Whoops. Yeah, I think it was the 786. The 706 coincides with the 618 of that impulse to the downside too. So that rejection zone seems to be interesting. So we can delete that, I guess, for now. But how do you get bearish trend-based fibs? Okay, let's just go over that one more time. So a trend-based fib tool is located here in your fibs section. You go to favorite that, and then you do 3 clicks. The first click is your impulse in whatever direction. In this case, it's to the upside, and the retrace to the opposite side, which in this case the downside. And then you look for that 236 entry, and it will take you to the promised land of that direction of price profit, which would be in this 1 to 1382 region, with resistance at the 65 or 706 or 786 levels. So this is where you would meet with consolidation if you were to go up. So you'd see this upside momentum, retrace, continuation, you find your entry there, and then you kind of surge up to here and kind of meander before going into that region. And that's for this, within this impulse retrace idea contains the math for that. So we'll go back and show you how that works on daily time frames and whatnot. So back here you have like an impulse to the upside and a retrace to the downside. Okay, simple as, right? So you get that, and you just put that trend-based fib from the bottom of that to the top of that to here. Boom. And that's what we have here with this accurately placed one. And the 236 is your entry, and you take that up, and you get resistance at the 78665 region. We saw that resistance a little bit as we broke through, and then once you broke through, you got up to that 1 region quite nicely here. And so we've been trying to meander back into the 1 and go up to the 1382 region on this bullish trend-based fib, which was installed from January to March. And you have these things that occur on smaller time frames as well, So to the downside here, you had a impulse down to here. Okay, and then a retrace up to here, and then that gives you the idea of us going down into these nether regions, which we did, and the 1618 happens to be where we consolidated and bounced out of. So this kind of fall and retrace idea shows you where the fatigue potential is in. Yes, people do take, measured moves from neckline and dragging them over, and you can do that too. But this gives you points of scalping and where you'd see fatigue on these levels, which we do see fatigue at. So Fibonacci is quite an interesting tool to add to your repertoire if you have not put it in just yet. So if we are looking at the 6-hour time frame here, we can draw a retracement down to the bottom, from top to bottom of this impulse to the downside. Granted, you should probably put it here, but we're going to go to the absolute low, and then that 618 region will put you at 29,128. So this 29,128 region, let's try to see if there is some sort of resistance that we can somehow maintain. If we maintain this, will we make it up to this region or not? Okay, so let's go into that 29 region on the monthly. Let's see what's up there. Juxtapose. So we go to that 29, what was it? 29.1. Alright, so let's see what's at 29.1, shall we? So there's not really much, as we ascertained on the monthly time frame, there's not really much above 28.7. So 29.1 would have you at $3 billion up there, not that much. Let's go to a 3-month time frame. It's just not really much in this region. 28.6 is the 13 billion up here, and then it starts to fade to single digits. Not really seeing that coalescence with the liquidity just yet on high block. So it could just chill out here and induce more and see what it does. So yeah, that's what we're looking at for Fibonacci levels, would be to ideally look at this as a fatigue point. If we go to lower time frames, you can also use something called the fair value gap fractal break imbalance and see where these fair value gaps are. If you don't have there's a fair value gap up here at 29.7 region, if we make it above that point. And yeah, this is where we're looking to aim our sights. So we're going to go look at the liquidity on the free liquidity indicator. What is this free liquidity indicator that we like to use? It's called liquidation levels by ML applications. Let me open up the settings and show you how to set it up. It's free. Nothing beats a free price tag. Liquidation levels version 2 by ML applications. Set the threshold to 0.1 and try not to view it on something above the 15 minute, because it gets a little hazy and gives you some ideas which may or may not be true. So here, as we look at the price, you can see I also tell it to show me the statistics, show labels and statistics, because it will show you those account values. So there's a 1.17 million 50x long that opened up here, and as they went up higher, and you're seeing $760,000 open up here in longs at 100x and 50x. They calculate the math based on the amount of money and stop losses and all that stuff. And so you can see which there's a $5.6 million short open up at 50x over here on this candle. They are currently underwater. So are they going to go up to these guys and liquidate that $5.6 million? That coincides with 28.6, and then you just go to like 28.6. Yeah, it's kind of like in that region. We lost a lot to Father Time, so we can't really see what was up there before. And you just kind of like, if you're just sitting in front of your charts and you're just observing, this is a nice thing to see where all these pools lie. And when they start to stack some 100x, they come back into the 100x and sometimes the 50x. And they're just constantly swatting off the 100x traders because they don't want to pay them in force. So they knock them out before they go higher, generally speaking. And then they knock out the 100 and 150 and 25x before they go lower. So a bear rises before it attacks, and a bull lowers its stance before it attacks. So everything gets very low and bearish before it goes up, and everything gets very bullish before it goes down. So that's because it's knocking out these shorts before they go into those regions that they hoped. That's why the trade goes up in the opposite direction of what majority think, because it's going to grab their stop loss. So we're in the Asian range right now. Asia likes to pump it before they fade it. We are now at 9:48 a.m. Tokyo time. Hong Kong generally around 10 a.m. likes to pull it back a little bit for lunch and everything. And so we could see a pullback consolidation here. I'm gonna probably just take profits while I'm up and then reconsider where to take out. So I'm gonna just freaking get out of this really quick. Limit close. We'll leave 25%. How about that? How about that? So we'll leave that. Put the stop loss in profit. Bada bing, bada boom. And that's good. Paid positive trade. Okay, so yeah, we could consolidate here. Let's get real. So we're going to throw on our indicators, heads up display on, and let's get on Momentum Master. All right, link in the description for more, momentummaster.info. Scroll down to features, toggle that stuff at your leisure, see what it looks like in its full glory, and you can look at each individual component and see how it works. So looking at Momentum Master, you would have gotten these dynamic alerts of 4 time frames oversold as we started to make those bearish tones to the downside, and that would have come to your phone as a dynamic alert had you been interested in those ideas. Here on the hourly time frame, you got one that closed here nicely as it cascaded to the higher time frame, and that would have been your solid view for an entry level. One thing that was interesting, this is a new formula. I'm not sure how to incorporate it. It's not listed on the website. I made it after the fact, but you have this pressure to the downside, this selling pressure, and then it didn't break at that level. So that's kind of like hidden bullish divergence because they couldn't sell off below a certain point, and so it surged up. And the same thing here, they had a sell off and then they surged up after that point. So a lot of times I see, you know, this kind of cumulative volume selling. This is basically, it's hard to explain, but it's looking at the disparity of volume across all the time frames and adding it up into a cumulative volume time frame delta, and giving you that volume across time, juxtaposed to different time frames and stuff. So yeah, it's kind of a new thing that I'm working on, and this is kind of interesting because it does suggest that idea that the sell-off occurred here and they couldn't really do anything about it, and then you saw this volume step in with the green vector candle here, and the bullish divergence started to spawn in here on Momentum Master B. Sorry, let me get this out of the way. So you started to get the bullish divergence here on the money flow and the RSI. You got it previously down here when the liquidity grabbed 27K. And yeah, so you got the bullish divergence, and you had all these bullish divergence overtones despite being ambiguous with the stochastic. And now you have the MACD starting to traverse back up into the domain of the stochastic and the RSI. And that's where we are on the hourly. The hourly is extremely overbought, which is why I decided to pay myself right there. And the 4 hour as well. We could chill out here for a bit on that daily resistance level to kick it off to London with a bang, who knows, we'll reassess at that time. So we are seeing the cloud resistance level on the 6 hour here, which also coincides with the 200 weighted moving average here, which is a conservative moving average idea, which we always like to come back to, as we did. And the ATR has not yet flipped to bullish, and we have a thick cloud to attend to here. So what do you want to see? Well, you would like to see this kind of go sideways of a certain fashion. If it pierces this cloud, then it will come back, retest, and go higher. So the cloud will do its thing as volume enters. It will start to thin ever so slightly, and then it will come back and test that and continue higher if that's the case. So that's like this angle and everything is a narrative that seems to go on till Sunday. I don't know if I'm necessarily bought on that idea, but that's what you like to see, is these kind of thinning of the cloud and these retests of it, and then you're gone after the thinning. So the thinning and the reclamation of the cloud is what installs a bullish idea in my mind. And where do we see that before? Let's go back to, where's the easy one? Well, just conversely speaking, if you see the rejection at the cloud, then you see these downside things as well. So the inverse, it doesn't always have to be the same. So here you have the inverse. I just flipped my chart. So you came up and you saw the cloud in your favor, and then you kissed the cloud and you were gone to the downside. So the same thing occurs on both cases. If you go and you reclaim that cloud, then you continue higher. So it's all about reclaiming this volume weighted moving average cloud, this volume weighted cloud formula, the trend cloud. So we are currently meeting with resistance on it, as you would expect, with this thickness on the 6 hour time frame and the 6-4, and now I believe the 12. Let's go look at the 22 now. How did the 22 treat us? So the 22 got the cross on that candle, and we talked about the cross. Okay, so 2-3 days ago we had this 4 hour cross, and we were maintaining this baseline the entire time. So the baseline was holding true throughout the bearishness. So the baseline not breaking gave you this idea of potentially going long, as it does back here when we had the cross down and we started to see the narrative shift to the downside. This is why the baseline is considered your first sign of reversal. So you look for the baseline for that first sign of reversal, and then you go to the 6 hour, and it started to cascade here. You had a crossover event here, and we've been maintaining the thin baseline ever since. You did have a little bearish moment here on the liquidity grab to that 30 billion, but since that point it's been upside from that manner. So you're seeing the rising sun also start to play out here on the 6 hour as you go to the 12. Alright, so the 12 hour just now starting to get the crossover event potential for that Williams. The last time we got that was down here. So is that going to occur? I have no idea, but the last time that crossover event occurred on the 12 hour, it was a massive move, which is why I don't short the 12 hour when it's low. That's not my kind of dealio. That's why we look at everything in juxtapose it as a grandiose narrative. So just because the 4 hour is high does not mean open up a short. No siree, Bob. What is the 22 and the 12 doing? And that was why you had the 22 and the 12 versus the 6 hour, the 4 and the lower ambiguous time frames, and they won. So you got the 22 hour to got a not confirmed just yet rising sun event. So this could still see momentum to the upside. We'll reassess before we go into work, but once again, I'd be looking for a potential. You are at a resistance level that does spawn back to a daily time frame that needs to break, and then if you get up to that level, you might have some reaction at the 618, as we pointed out. You are getting overbought on the hourly, the 4 hour, and the other time frames, so we should see some sort of chill out here as we eat into some of these 100x guys. So the orange characters down below here are 100x characters. So this 100x $150 million pool that opened up here at this candle at 28 even, they could come back and say, no you don't, you're not getting paid that money, sorry, and then just come back into this guy and chill, because they got the shorts where they want them, hook, line, and sinker underwater. So those underwater shorts can chill out while they flag out and go eat some of these 100x. So eating the 100x is a common story, if you will, because they're paying them 100 times the money. They basically cut the line of guys like me who are going 5x, who are very frugal. So they just want to get paid their moonshot, which is not going to happen, and they will come back and eat these guys alive. And so it could come back into these long arrows now, even though this is built stacked up quite nicely above. It could squeeze up to come down into this too. I'm not going to play around with this high level. I don't long as things break out. I long down into these bearish tones, generally speaking. Okay, so what does it all mean? What does it all mean? Well, as you break through the cloud, just like on all time frames, when you break through here as the cloud was thinning, you broke through and you were gone. And so at some point you come back and you retest this cloud and go higher. So when does that happen? At what stage? I have no idea. But if you were to look at just here, let's go to a lower time frame here on the 15. I'm going to turn off the liquidation level, sorry. Where's that? There we go. So you're getting the cross down event on the 15 and the baselines above the price. So this is why this is a scalper's dream, and a lot of people are using this sub 1 minute time frame for scalping, because when you get these cross down events, they are leading formulas. So this showing you that you're fatiguing and potentially coming down here on the 15 minute. So seeing this cross down event confirmation overbought on 3 time frames, you could come down to kiss this adaptive moving average, which would coincide with that liquidity quite nicely at 28,100. So you could come down here and chill out for a bit. Once again, I said Asia likes to pump it before they fade it in general. So sometimes they bring it down after that and chill out for lunch and bring it to an equilibrium while London kicks it off again. So that's where we're at. So we just thought we'd give you a little bit of a short market update to keep you in the loop, and where we would see for potential fatigue levels. All of these dotted lines are daily resistance levels, which we could not reclaim as support. Resistance, and we saw that downside, and this is daily resistance. Are we getting a resistance here? Or are we going to fake out and then fade after that point? This is what I'm looking at currently, is a continuation to the downside at some stage. When is that stage going to occur? You look for that bearish divergence and what the 12-hour is going to do. So we're trying to think about that in terms of, that 618 rejection of some nature. Not going heavy into it, but we'll see. Wednesday, what is Wednesday going to do? Are we going to see like a consolidation for London and then a pump up for New York, and then we start to fade for midweek reversal Thursday, run for profit Friday? I don't know. The profit is currently to the downside on these higher time frames still. So you do have these pools not suggesting going up to here, but going back down and revisiting 25k, particularly on the 3 and the 6 month for high block here. So I'm not necessarily sold on this long idea. This might be just a liquidity grab, as we've been suggesting since Sunday. So this could be a liquidity grab to stop out the shorts before they go lower. Not completely sold on the long, necessarily speaking. Alright, let's go see how the chat's going. Wow, nice. Those noodles below are starting to stack back up. Yep. Is it similar to little hands down thing? Yes. So the other thing that's also new is the higher time frame suppression. So I turn this off sometimes because it gets wonky on the lower time frames. It's meant to be viewed on a higher time frame. So this thing is just telling you what it's doing on the higher time, like what is the support saying on the higher time frame. So this one I'm also unsure how to incorporate it, but I was trying to back test ideas where it was overbought and it was still it wasn't resetting here, for example. Like you had a cross down event but you didn't dump out of this, and that was because you had higher time frame support, so the suppression was to continue higher. And then here you were oversold. Like if we go back in time here, right, I'll show you what I was seeing on that. So if we go back in time here, you were oversold on 6 time frames, right? But you didn't see a surge higher here. Why was that? Well, the higher time frame was not in your favor and it was pointing down. So this is basically for higher time frame reference, and it was telling you like be aware that even though you're oversold on 6 time frames here, the higher time frame is pushing down against you. At that time we had like 3-day and 22-hour and daily, I think it was just basically 22-hour not in our favor, and boom, it started to dump down here in your face. And these are 4-hour candles closing with that suppression intact, so that's pretty strong suppression. And so that ambiguity of having the 6 time frames oversold could have told you that, you know, the long was not the idea here. The short and the baseline cross down event was telling you that price was fatiguing out here. So that suppression it's just a little extra oomph, but I don't leave it on entirely. Nothing is meant to be on all the time. Not everything. Better is not more necessarily. So turning these off and on, it's just tools like my heads up display right now. You can toggle them on and off. When I do fibs, I do nothing, no indicators. When I do liquidity, I don't really look at the indicators. So the style that I do in this live is kind of how I do it. I turn these off and on with the eyeballs here, and I don't use everything all at once. But that suppression idea would have had you at hello for these shorts, and kind of disregarding these oversold time frames, because it was telling you the higher time frame was calling for that downside idea and the bearish retest of the cloud, and down we go. So yeah, I'm unsure. I haven't back tested them thoroughly enough yet, so they're in there as these extra features. The money, consider the money flow, which is the cumulative time frame, volume delta, whatever you want to call it, and the suppression. These are kind of new as of February, I believe. So you can turn those off if they're confusing. I'm still trying to figure them out myself, but that's how I figured out the other stuff. I just added stuff, tested out stuff, and then tried to look for confluence of where it actually played out, or tweaked it to make it more accurate, removed duds and things like that. Why did that dud occur? And so basically it's just been 2 years of getting these things tweaked just so right, so where it's like that's the freaking top, you know. And then seeing that on the 8-hour when we went back here and we saw that crossover event, like that was the literal top. And I said mind the 8-hour. Peyton was pointing this out a long time ago back here, over here, when we had that 8-hour cross, and then we saw that downside play. So like seeing these cross down events are very, very informative, to say the least. So cross up event also tells you that you're going up. So you get these things as leading signals before they occur. So it's kind of an interesting thing to note, if nothing else. Any other questions? I like the questions. Let's keep them coming. Yeah, no problem. Thank you, CNC. Thank you for coming on in. Alright, so yeah, this is the different tools featured within. The baselines are quite interesting. We had that 6-hour cross cascade with the 8-hour and the 4-hour. So we're just looking for that fatigue point. We're at a weighted moving average, so we could just consolidate here. We have not flipped the ATR. We have not flipped the cloud here. So we're not necessarily bullish just yet. This is just a liquidity grab idea. And are we done? Does that mean just open up shorts? No, it means you wait for like bearish divergence of some kind. I still have 25% in the trade, so I'm still seeing where this could go to the upside, but I'm satisfied with that pump. And yeah, this cloud is still strong on the hourly. However, we are overbought on the hourly and 4 hour here, but it looks like we're starting to create an ascending channel of sorts that's kind of going up in this fashion on a path to that upside. Let's just play around since we're here before work. We could just play with some pitch fans or something. So the pitch fan zone, you get in at the 706 region and then you get out at the 706 region. So we're at that resistance of the what is this, the 382, I think. Let me see this, hold on. 382, yeah. So this is the 382 resistance before we go up to the 0.5. Then you got the 0.5 and the 618 here, and then the 0.65 and the 706. So if you have a pitch fan here, you have the rise and the retrace, and then that gives you the math to the upside with these diagonal fibs. If you want to mess around with pitch fans, there's a free indicator that I recommend by DGT. Here, let me get this off your screen. It'll help you see where these pivot points are. This one is called Pitch Fan by DGT. You can put in all of these settings. You can pause the video at this point, copy mine. My deviation was 6, depth is 11, and then you can kind of see where they draw these retrace ideas in, and where that 706 for a continuation to the downside would be. But this is their deviation, so I have a different one up here too that pulls it from different points. So if you're pulling it from different points, it gets wonky. So sometimes going to like the 75 minute or the 45 minute gives you a deviation that's interesting and something you never thought of before. So like, let's just go to the 4 hour. And it gives you these kind of like diagonal pitch fan ideas. You're like, okay, it took it from that point down to this point, up to that point. That's an interesting idea. And then it's looking at equilibrium here at 20,643. But it's fascinating, to say the least, how these diagonal fibs become these resistance levels. I mean, it's all math through and through, so it's about finding these trend lines and whatnot. So yeah, that's just one little cool tool that I always have muted in the background that I can play around with, so you can kind of take the pitch fan from your trading view tools and play with that, and kind of like see where these levels are and see if it holds true to that. So if we go to here, this pitch fan, here, and here. Okay, wait, I don't think I have it at that level actually there. Yeah. So the rise and the retrace down. There we go. So yeah, if we were to go up to that 618 region, so we're getting that diagonal 382 resistance. And I don't know, it's just they've been really good to me. I mean, I showed you that cool idea here that we've been having up for, how long has it been now? 3-4 months? Basically since January 16th, when I was noticing it doing the same thing in that 382 region, and then it was like going up to these regions and hitting against the resistance and breaking down, and it was finding these lines as resistance levels. So it is what it is, but I just found that zone here for that. So that brings me back to, like, you know, a mean reversion idea for that would be 1937. The red line is the mean reversion of that. What is mean reversion? Well, it means you revert to the average price. So this means you're at a premium level. So if we were on this path to be average priced, 19,371 would be the average price to come down to here. If you were to consider this as premium versus discount, the discount regions being down here and the premium being where we fatigue out and fade. And so we nearly came down to that mean reversion back here in March 10th, and then we went back up to premium. So are we going to head back down into some of these discount regions? That's what the pitch fan to me represents, is kind of a discount versus premium idea, with the red center line being the mean reversion of that. And so they're just kind of interesting little tools you can use, if I do say so myself. I'll take any last questions before we head out and bid you adieu. Let's go see what this is doing. So you're getting that same kind of, everything's just fractal in nature, right? So this is kind of like rejection at the 382. Are you going to come back down to this 236? Then you have the 236 down to the 0. So it's all coming down to that region. And if you can get up to that idea. So let's see what's going on. Why don't you use the suppression consideration on the lower time frames? Well, it's just too frequent for my eyeballs. It's a little bit too much. Like every minute it's like flipping back and forth. I don't really know what it is that I'm looking at per se, but I was trying to design it to give me when these things appear 6, right? So if I turn this on and I consider the suppression in this mix, like if we go back to here, okay, and you see how it has a down arrow here on a 4-hour candle? So that means I would disregard these longs. I would be looking for shorts. Here, I was looking for longs on this 4-hour plus candle. And then when it started to give me this down arrow here, if it gives me this oversold idea, like the 7 here or whatever, that finger, it's too fast, but it would have given me the idea to just chill out until we come back to some sort of pool of before longing it. Basically, I wanted to try to find something that countermines this oversold nature on these 32 indicators that give me that 7 there. So this dud of the 7, which is not a dud on the indicator, it's actual values of being oversold, but I don't want to take these, right? So I want to know what's at play on the higher time frame that would support the suppression of those overbought and oversold ideas. And then so here you're starting to get that push to the other side, curvature, so you could see that suppression to the upside, which did kind of push up. So yeah, I tried to design it as a higher time frame thing, so I don't really turn it on when it's at a lower time frame. So here you're seeing that suppression. Here you saw that suppression. So even though you were getting kind of like oversold, it was just the overall narrative was bearish in tone. So we still have yet to see that finger pushing up, so it could fade out at some point with that head and shoulder idea I put out in the other at the beginning. Alright, well it was kind of short but sweet, I think, I hope. So once again, thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, and we'll do the same, bring in the fire and bring in the precision as we do each and every day. So we'll catch you on the flip side. Peace.